Good afternoon, everybody. This is Supervisor George Hoehmann, Supervisor Town of Clarkstown. I want to thank all the folks that are joining us, along with Tom Morley from the Small Business Administration here in Rockland County. I do want to, before we start, I do want to just offer a couple of quick remarks, and then I'm going to very quickly turn it over to Tom Morley, who will be presenting. You'll have the opportunity to ask questions throughout this webinar. Tom is going to go for about 30 to 35 minutes approximately, and then we'll be taking questions during it and also at the end as well. A lot of changes, a lot of information as these programs have been refunded, expanded, and started. And again, the reason we're doing this obviously is we did this earlier on in the pandemic. Clarkstown really is the center of business here in Rockland County. We are very proud of the fact that over 60% of the commercial ratables in Rockland County are based here in the town of Clarkstown. So as Clarkstown goes, so goes the rest of Rockland County economically. And so it's really important for us to do everything that we can to make sure that we're reaching out and offering assistance to our small businesses. There's a number of programs, obviously, as you'll see, that Mr. Morley from the Small Business Administration will be speaking about. I do want to alert you to just a couple of others before we begin, and this will also be available as part of this presentation, which we'll place up on our YouTube channel for Clarkstown, and we'll also put a link out on our town Facebook page and also in our e-newsletter so people can see it spread far and wide. So Tom's going to talk about a number of programs. He's going to talk about the Paycheck Protection Program. He's going to talk about the New York State Forward Fund, as well as the Economic Distress Loan Program. But before I turn it over to Tom, I just want to tell you about a couple of other programs that we're familiar with that are privately run programs that businesses can apply for. The first is the Barstool Sports Fund. It's been raising money through public outreach through the Barstool Sports network, and also it's a blog and a Facebook social media platform, and they've raised millions of dollars that they're actually putting out as loans and grants to businesses that are in trouble as a result of the pandemic. Businesses can apply for funds. They do not have to be paid back these funds. You have to kind of go through your, what your liabilities are. The link is actually at www.barstoolsports.com/thebarstoolfund. That's www.barstoolsports.com/thebarstoolfund. Again, it's a private fund. It's essentially grants for businesses that have been impacted by COVID. And I have been told that there are some folks in the area that have actually applied and have received some funding. The second is another grant program that's through the Empire State Development Fund called the New York State Bar Restaurant Recovery Fund. This offers up to $3 million in total program funding in individual grants. They're small grants for qualifying bars and restaurants. It's a reimbursement grant for qualified expenditures, including things like COVID safety measures. And you can apply for the grant at esd.ny.gov/Raising NYS Bar Restaurant Recovery Fund. I'll repeat that. And again, this webinar will be up on, will also be up, as I said, on Facebook, and will also be up on our YouTube channel as well, and we'll be e-blasting it out this Friday, the link to it. But again, this is esd.ny.gov/Raising NYS Bar Restaurant Recovery Fund. And again, these are just two funds that are offering. One, you don't have to pay back. One is a grant from the state, and the second one is actually more applicable to bars and restaurants, obviously. So without further ado, I want to turn it over to Tom Morley. I want to thank him for his efforts. Tom has been a go-to guy for us here in the town of Clarkstown. We've referred a lot of people over to him. He was instrumental in working with us, putting together a webinar early on in the pandemic that we did jointly with the Nanuet Chamber of Commerce and the New City Chamber of Commerce. Given that there's been a number of updates to these loan and grant programs from the federal and state governments, we wanted to get that information out. And of course, Tom, I know will present it in a very thorough fashion. So at this point, I'm going to turn it over to Tom, have Tom take over sharing the screen, and we'll be answering questions throughout, and Tom will be presenting for the next half hour to 35 minutes on what's new and how businesses can get help as it relates to COVID. Go ahead, Tom. Thank you so much.
Thank you, George, and thank you very much for putting this program together. You've been our go-to guy in terms of stuff in Rockland. So is my screen coming through? And how about the audio? Are we good on that?
I believe we are.
Okay, good. So the IFR, the interim final rule, is 82 pages. The interim final rule is SBA's interpretation of the legislation. The legislation itself is 5,593 pages. It's still getting digested, software is still being written, things are still being implemented. So be patient, but be persistent with your banker, with lenders, with others, and of course with SBDC. Many things will continue to change. Some of the things we do know already, you can choose your time frame from 8 weeks to 24 weeks. The benefit to that is it gives you a longer period of time for using the money. In some cases, you may decide that 8 weeks or 10 or 12 weeks is good for you. In many cases, though, pick the 24 weeks. It gives you all the flexibility you need. One thing that has not changed, 60% must still be spent on payroll. They opened the definition of payroll expense slightly, not very much, but just a little bit. Excuse me, but 60% must be used for payroll. The remaining 40% can be used on a broader range of expenses. They've opened that up to include operating expenses, supplier costs, PPE costs, things of that nature, rent, are now eligible in there. Eligibility, I'm having a hard time saying that one. Eligibility has changed, not just in terms of whether you use your 2019 or 2020 payroll based on which one works better for you, but more organizations are now eligible to apply for paycheck protection, including 501c6s, which are essentially business groups and promotional groups, housing cooperatives, direct marketing organizations, tourism entities, things of that nature. There's greater flexibility for seasonal employers who have, there is a test for whether or not you're a seasonal employer. It's generally, if you do most of your business in a 6-month period, you're going to qualify. The loan amount is still 2.5 times your payroll expense. However, if your SIC code, that's your standard industrial classification as reported on your income tax for your business, starts with 72, that means that you're in restaurants and hospitality. You get 3.5 times your average monthly payroll, not 2.5. The government's acknowledging that hospitality has taken a bit of a bigger hit than some other segments. Be prepared as you're getting ready for your application to include 941 forms to document your payroll expense and other, payroll journals. If you use a third-party payroll provider, Paychex, ADP, somebody like that, they have reports for all the stuff that you need. 1099 quote-unquote employees are still not included. However, they can apply on their own. So you might have to provide them with the information they need and the appropriate statements, but they can apply on their own. Some of the other items that they included as direct payroll costs, they were included on the forgiveness, but now they're being included on the front end. Health insurance, vision, dental insurance, retirement contributions, reported tip income, state and local payroll taxes and unemployment taxes that are paid by the employer. No taxes paid by the employee are included. And again, as noted, to have your loan fully forgiven, you have to use 60% of the loan proceeds for payroll expenses. Owner compensation is still capped. Depends on how you paid yourself as an owner, if you happen to be a business owner. In any case, compensation is still capped at a $100,000 annualized rate. Okay, so that's some of the early stuff. Just a couple of strategic considerations you might want to think about. The Consolidated Appropriations Act, that's the second round of the stimulus. It expanded the provisions and programs with the second draw. They clarified the tax deductibility of PPP expenses, which is very beneficial for small businesses. More specifically, originally, you were not allowed to deduct the expenses associated with the Paycheck Protection loan. So if you used PPP money to pay an expense, you couldn't deduct the expense because it wasn't paid by you. There was a logic to that, and there was an IRS ruling to that effect. However, Congress clarified now that wasn't their intent. Their intent was that you can deduct the expense also. You do not show the forgiven loan as revenue, but you do take the expenses. That can be a significant tax benefit to some folks. You might be saying, well, I lost a ton of money. Now I'm just going to lose more money. Tax loss carry forward can be a very good thing moving forward in terms of freeing up money in your business on a forward basis. So it's generally going to be very good for most businesses. It's going to complicate life a little bit because you're going to have to kind of show two sets of numbers or footnote your numbers such that your financial statements will continue to make sense if you submit financials to a bank or some such thing. They did extend, I should say this, all these amendments in the second version are effective as if they were included in the original CARES Act, and they apply to any PPP loans that are not yet forgiven. If your loan was already forgiven, A, that's a great thing. B, SBA will go back with your lender, and if your idle advance was deducted, things of that nature, that will all be fixed shortly and automatically. You don't need to do anything. SBA will do that with the banks. So we've got the expanded eligible expenses now include operating expenses, property damage due to COVID, supplier costs for essential purchases, personal protective equipment, and other worker protection costs if you've had to put up the sneeze guards and things of that nature. Some idle loans can be refinanced per se with second draw PPP loans, but there are a number of special considerations which you should review in your case with your lender. It's tough to say these are the rules surrounding that. It depends on how you use the money, when you got it. There are certain time frames when it's not eligible, some time frames where it is eligible. So go over that in your circumstance with your particular lender. The employee retention tax credits, which are another specialized program, they were cleaned up a little bit in this legislation. They were extended retroactively and on a forward basis. Those are the sort of things that do require professional assistance in terms of get with your accountant to figure out if that makes sense in your situation, and if so, how you would take advantage of it. Okay, so keep in mind, the Paycheck Protection Program is a loan to provide a direct incentive for you to keep workers on the payroll. So you will be reporting in the second draw PPP program what everybody came to know as FTEs, full-time equivalents, from the first round of the program. So if the employee retention criteria met and the funds are used for eligible expenses, SBA will forgive the loan, which is the nice way of saying you're getting the loan from ABC Bank Incorporated. SBA is guaranteeing that loan, and once you apply for forgiveness, SBA is paying that loan off on your behalf. So that's how that forgiveness works. Any portion that isn't used correctly is going to convert to a loan for 5 years at an interest rate of 1%. Loans that were issued prior to June 5th of last year have a 2-year maturity. Loans after June 5th have a 5-year maturity. Why that is, the loans prior to June 5th are a set of instruments. They're a set of debt instruments between SBA, you, and the bank, etc. It's very difficult for them to go back and change those. If you're stuck in that situation and it's a problem, call the SBDC. We'll explain how you can kind of work through that. Okay. Loan payments on this loan will be deferred for borrowers who apply for forgiveness until SBA pays the loan off for you. If you don't apply for forgiveness, the payments are going to be deferred for 10 months from the end of your covered period for the borrower's loan forgiveness, for that portion which is forgiven. Now, what you should keep in mind is if you don't apply for forgiveness, the SBA doesn't know what to forgive, so they'll forgive zero. And that's going to convert to a loan with the bank. The bank is then going to come knocking on the door and say, yo, Tom, you owe us some coin, start making the payments. PPP loans do not, first or second draw, do not require collateral or personal guarantees. That's an important consideration for some folks. There are no fees associated with it. Now, that said, if you call your accountant or other professional to assist with preparing the information that you need, there might be a charge for doing that work on behalf of your company, but there are no fees associated with the loans. I have a note a little bit later on in the presentation. Be mindful if you're searching for applications or information, if you're searching for something online, the Paycheck Protection Loan Program is a loan between you and your lender. So make sure you're seeing email from that lender or from SBA. Any SBA email will have a .gov as its ending. There is a group out there called SBA.com. It is not SBA. It's a commercial site that is trying to sell you services to work with you to apply for SBA loans. So as you're looking for information and stuff, just be careful who you're interacting with. Okay. They changed the eligibility on the program such that you cannot have any more than 300 employees. Now, I agree that probably for most of us on this call, that's not going to be an issue. The benefit to it, though, for people that are on this call, the number of companies between 300 and 500 employees, which was the original limit on employees, those companies drew a significant amount of dollars from the program. There were not that many companies, but they drew a large amount of dollars. This helps keep more money in the program for a longer period of time for smaller companies. It's an important consideration. The next 72, so basically food service, restaurants, hospitality, the 300 employee limit is by location. So, let's assume that you've got maybe 325 employees, but you don't have more than 300 in any one location. You would be eligible for it. Another aspect of eligibility is that you must have experienced a reduction in gross receipts of at least 25% in any quarter between 2019 and 2020. You have to compare the same quarter. So if you're comparing quarter 2 and 19, you have to use quarter 2 and 20, quarter 3 of 19, quarter 3 and 20, etc. It's important that you do that. If you want to list your business by quarters and show that, yeah, in Q2 I had a 27%, in Q3 I had 38%, in Q4 I had 57%, whatever it is, that's fine. Some banks, however, on the software are only giving you the opportunity to list one quarter. So if that's how the form is, just pick your worst quarter and list that quarter as the quarter that you're using for your comparison. The business must not be more than 20% owned by an entity or a person from the People's Republic of China or the special administrative region of Hong Kong. Politics finds its way into all sorts of things. This is how it found its way into paycheck protection. As we noted a little bit earlier, if you are filing under a NAICS code that starts with 7.2, your multiplier is going to be 3.5 times your average payroll, not 2.5 times your average payroll. The same limitations apply, though, in terms of up to $100,000 annualized salary per person. There's a limitation on the number of loans. You cannot have more than one second draw paycheck protection program loan. Similar to round one, or what's being called first draw, you can have one first draw and one second draw, but you cannot have more than one of each. These are considered one bite at the apple programs. In terms of revenue, one note that I did miss on my notes here, sorry. As you're looking at your revenue reduction quarter to quarter, you have to look at revenue using the bookkeeping method that your business ordinarily uses. Granted, it's not going to apply to a lot of us, but if you're using certain types of accrual methodologies, if you're doing advanced bookings, other unusual circumstances other than I did the business today, I booked it today. But again, your accountant can assist you with that. Some other limitations: if you spend 15% or more of your time or dollars on lobbying or advocacy work, you're excluded from the program. The business must be currently operational. Now, that doesn't mean that your doors necessarily have to be open, but you have to be prepared to be open. And when you get the loan, you do have to reopen. So, do keep that in mind. The program expires on March 31st of 2021. So you've got essentially 2.5 months to get in or not. I should note also at this point that the Economic Injury Disaster Loan Program has reopened. It actually reopened a while ago. The good thing is, though, they've put more money in the program. So there's more money available for SBA to lend under the Economic Injury Disaster Loan Program. If you were adversely affected by the $150,000 cap that was placed on that program, now would be the time that you might want to apply for an appeal on the amount that you did receive. If SBA agrees and says, yeah, you would have gotten more under the formulas that we were using, then they will send you an offer to take additional money. It will be a separate loan instrument. Generally, SBA does not modify any existing loan instruments. Okay, a couple of important links. We have some more links at the end of this, and there is a handout that is the PDF of this presentation, so you guys will have all these links in terms of connecting to these things without having to write it all down. Okay, this is the application. I put the picture up more because I wanted you guys to see. It kind of looks intimidating, but it's not. Depending on the size of your screen, I don't know if you can see my cursor moving, there's not a lot of information that you really have to put down here. It's kind of like doing a tax form. You're filling out information that, if you're audited, and a percentage of these loans will be audited, the bank will verify the information to the best of their ability. They may call up and ask you for this or for that, for some supporting documentation. So be prepared to have it. I would not suggest putting down any number that isn't accurate. I would not suggest rounding numbers off. Yes, you can drop the cents value on anything, even the IRS is okay with that, but be as precise as possible. Also, be sure you, in fact, need the money, that you did have the revenue reduction, that your business is hurting, because you're making a bunch of representations in this section and in this section, and this one as well, that you need this money, that this money is essential to continuing your business. If you need any assistance on filling this out, I suggest definitely call the town. They've got some resources. Call the Small Business Development Center over here at the college. That's essentially what we do for a living, is help you deal with government programs and things of that nature, as well as non-governmental programs. But if you're hung up on any, how do I answer this? What information are they looking for here? Just give a yell. Happy to help you out. That's what we do. Okay, that's just the rest of the application. A lot of the text that you're seeing are the instructions. It really is a doable form, so don't be put off by it. Don't be intimidated by it. It's a government form designed by people kind of like you and me. They're folks that just go about doing their job every day and try to do it fairly reasonably. This last section over here is demographic information. It has no bearing on how your loan is processed or accepted. It has a bearing on SBA reporting back to Congress that the money in the Paycheck Protection Program was used by the people and in the areas that Congress intended it to be used, which is the polite way of saying they wanted to make sure that it got to small businesses, that it gets to women-owned businesses, that it gets to underserved communities. So that's just demographic information. It's good for reporting so we know where things are going. Okay, so expenses. Covered operating expenditures means a payment for any business software, cloud computing services, things that facilitate business operations. processing fees, payroll fees, human resources costs, sales and billing functionality, accounting, inventory, records, things of that nature, the operating expenses of the business. Those costs are all now eligible in the 40% side of this. 60% still must be for payroll. Covered property damage. Costs related to property damage under vandalism or looting due to public disturbances that occurred during 2020 that was not covered by insurance or other reimbursements. So if your storefront happened to get broken at some point in 2020 during a period of civil unrest or a public disturbance, and you didn't have insurance, this is a valid expense. Again, that's a fairly small number of businesses in our area that will have that. Excuse me. Covered supplier costs. An expenditure made by an entity to a supplier of goods that are essential to the operations of the business at the time at which the expenditure is made. In other words, you can't pay in advance for stuff. Is made pursuant to a contract, order, or purchase order. In other words, you ordered it. You use this in the ordinary course of your business, and it's essential. The purchase was made the purchase was in effect at a time before the covered period, and with respect to the applicable covered loan. In other words, yes, you ordinarily buy this. I ordinarily buy lettuce to produce the salads that I put in boxes that I sell at supermarkets. So, don't get creative here. If you're not using the bulk of this money for payroll and you need to use it for some other stuff, that's understood. Just make sure that it fits the definitions and the criteria. Okay, covered worker protection expenditures. So whether you're buying masks, PPE, gowns or suits, that sort of thing, or anything that is required by a state or local government between the period of March 1st, 2020 and the end of the pandemic, which hasn't been declared yet, or the end of the national emergency, which hasn't been declared yet. So if in your particular industry, CDC is recommending that your employees all wear rubber gloves, and you have to buy rubber gloves, that would be a covered worker protection cost. The cost can also include the purchase, maintenance, or renovation of assets that control your businesses. Again, physical barriers, outdoor equipment for dining, other things required for social distancing, the floor markings, those cute little signs that you see on the floor, stand here, don't stand there. Those things are all eligible. So particulate filtering face piece respirators, et cetera, you don't have to buy N95 respirators, but if you're buying respirators that are appropriate in your circumstance, that is an eligible expense for the 40% portion of paycheck protection. Okay, we talked a little bit about this at the beginning, but some accounting treatment updates. The latest legislation clarifies and amends some significant issues. And this is the biggest one. The expenses paid by PPP funds are now fully deductible for tax purposes. There was prior guidance to the contrary. I doubt anybody's actually filed unless you're on a different fiscal year. You may have filed. If you did, you can file an amended return. If not, when you file your return, you can file and take those expenses as well. And you do not need to show, ordinarily a forgiven loan is considered income to a business because you derived a benefit from it. If I lent you $100,000, if I had $100,000 and could lend it to you, and I forgave that loan, that's the same as just giving you the $100,000. So it's revenue to your business. Paycheck protection loans are not revenue to your business and do not need to be treated as that when they're forgiven. So you kind of get a double bang for your buck there. You don't have to show the paycheck protection loan forgiveness as revenue, and you still keep those expenses. They also confirmed that the tax-exempt forgiveness income increases the tax basis for partnerships and S-corps. If you're in a circumstance where your cost basis or your tax basis is significant, you will understand that. If not, don't worry about it, doesn't apply to you. The question that's still open is whether or not states that rely on federal tax data and treatments, what's called decouple from the federal side of things, is unknown at this point, although New York did announce the other day that they are not going to decouple from the Paycheck Protection Program amendments. So in New York State, you still get to not show the revenue and take the expense. New York has indicated that. I've not seen the citations on that as yet. So we're gonna have to wait for that to come out in writing. But if you are also in other states, you do need to check with your accounting professionals as to where that stands for your state and whether or not it's been decoupled. Okay, the employee retention tax credit, we talked about that a little bit at the beginning. Originally, you couldn't use it if you had a PPP loan. That exclusion has been removed retroactively. However, I should note, this is a specialized program that likely requires a specialized review by qualified accounting professionals to determine if it makes sense for your business. Even though it is a tax credit, in some cases, you're pushing a liability back. It depends on how your business is configured and a number of other factors. So check with your accounting professional to see if that program, the employee retention tax credit, makes sense for you. It may not. So I would urge some caution on that just to be sure you're doing it correctly. The Emergency Paid Sick Leave Act, FMLA, and FFCRA have been extended, but the participation rules have changed. In general, the change to the participation rules is no longer mandatory for many companies. Where this makes a difference is a number of companies with as few as 15 or in some cases 25 employees were required to do paid sick leave for employees that were confronting COVID issues and some other kind of related things. It was an onerous obligation on a number of small businesses. I mean, you've got 15 employees, 3 people decide that they're afraid to come to work. So you're going to have to pay them for not even showing up. So that has changed. But again, in your circumstance, check specifically and see where your business fits in that equation, because it will make a difference. Okay. If you are going to look at the and getting back to some of the specialized tax treatments, if you look at the employee retention tax credit, if your business does have more than 100 employees, the tax credit is only allowed for employees not directly providing services. It's in some cases a semantic distinction, but again, it will require a distinction be made by professionals. So do make sure you consult a professional on that. If your business has fewer than 100 employees, all employees would be eligible to be treated that way. The amount of that credit has increased from 50% of qualified wages to 70% of qualified wages. And the cap on those qualified wages was increased from $10,000 annually to $10,000 quarterly. So it effectively increased the maximum credit per employee from $5,000 to $14,000. Again, requires specialized stuff. You do need to have the revenue reduction of not less than 20% year over year, which originally was 50% to use that program. I don't know if we have any nonprofits on the call today, but if we have any nonprofits on the call today, nonprofits are eligible for that. They originally were not eligible as qualified employers. Okay, so the Emergency Paid Sick Leave Act and the Emergency Family Medical Leave Expansion Act and Families First Coronavirus Response Act, through the end of March 2021, they were extended through the end of March 2021, but participation is now voluntary for most employers. If you want to be a nice employer and cover your employees, you're certainly encouraged to do so, but it's in many cases, it's no longer mandatory. There were some other changes that might make a difference for some of you folks personally. If you don't itemize your deductions, there are some things that you can now take anyway, even if you don't itemize. Flex spending and dependent care accounts were changed. You can roll over unused balances. You can change mid-year elections. There was a change in educator benefits, so a little plug for the college that things are more deductible. Meals, by the way, business meals, which ordinarily are only 50% deductible, are 100% deductible during the pandemic. Don't go running out and buying lots of meals unless you just want to be a good person and support the small businesses in your neighborhood, because now it's deductible. But again, just considerations for folks as they're moving forward. The New York Forward Loan Fund is a state-based loan fund that originally, if you had a PPP loan, you were not eligible to apply for. Empire State Development of New York State has made an eligibility, I'm having a hard time with that word today, sorry guys, has made an eligibility change to the New York Forward Loan Fund. So as long as you have 50 or fewer employees and your PPP first draw loan was less than $500,000 and you did not receive more than $150,000 under the EIDL program, you can apply for a New York Forward loan. Again, it is a loan. It's a low interest rate, relatively short term. I believe it's a 5-year term nowadays on that. But for some folks, yeah, it's a source of working capital that might make some sense for your business. They are specifically working capital loans. They are available to small businesses, nonprofits, and small residential landlords. The additional landlords can be significant because we do have a number, in places like Rockland, we have a number of smaller landlords. And there was a report recently out that in New York City alone, there's more than $1.1 billion in unpaid rents. Granted, Rockland is not New York City, but I'm sure we have a lot of unpaid rents in Rockland County as well. So if you're a small landlord, the New York Forward Loan Fund as a working capital loan, it could be useful money for folks. There also were regional set-asides, and we're considered part of the Hudson Valley region, and they're supposed to get 12% of the program. That was based on populations and some other stuff by the state. And in terms of the residential landlords, the program is targeted toward owners with residential buildings of 50 units or less. Now, we might all say 50 units is a big building. Yeah, for us, it probably is. But they are prioritizing loans for residential landlords, also whose properties are in low and moderate income census tracts, or who serve LMI, low to moderate income tenants. LMI numbers in places like Rockland are a little different than they are elsewhere, given the cost of living in Rockland. So again, if you're a small landlord, give a yell. We'll try to help you figure that one out. There are 5 CDFIs, Community Development Financial Institutions, participating in the program and accepting applications there. That application is a tad more complex. It's the state. It's the government. We create paperwork. We like to kill trees. So we can give you some help with that if you need it. But again, it's useful. It's a useful source of working capital, even if you've received money from SBA at this point in time. Okay, just some useful links, and since I see the presentation is out there for folks, you don't have to write these down. It'll be in the presentation. I'll add that note. Also, be aware of non.gov websites. Please be careful. And in terms of second draw PPP, in many cases, whoever did your first draw loan is the bank that's going to handle your second draw loan. So keep checking with your bank. Most banks opened up today. Some banks are opening up tomorrow, but most banks did open today. And with that, happy to take some questions.
So Tom, it's Supervisor Hoehmann. Thank you so much again for your willingness to work with us. And we'll have a couple of comments at the end, including the availability of Jeff Gillies, our economic development staff person. Jeff was brought on earlier in 2020, and he's been out to meet with a lot of our restaurants and bars and businesses. If there's anybody on this call that needs assistance, they can always contact Jeff. We'll give his contact information as well. He can be reached at 639-2063, 639-2063. Also, his email is j.gillies, Gillies, @clarkstown.org. That's j.gillies @clarkstown.org. So Tom, we do have one person that raised their hand early on in the presentation. We can go to that person first, and then there were at least 2 questions, Tom, that are in the window. We're going to make you an organizer so you can see those, but we'll go with the person who raised their hand first. And all right, and what's her name? Yolitza Laranza. So Yolitza Laranza, you would raise your hand. Go ahead with your question for Tom.
Hi, Tom, and thank you so much for this. This is truly very informative for us. I am from Glitter and Glam. I have a store in the Palisades Mall, and I did miss the grant information that was given in the beginning. I know they gave us like a website. Is it possible to repeat that again? That website?
I'm not sure which website you were referring to,
It was
but
for the grant.
there's a copy of the presentation in the handout section on your screen.
Okay, perfect. Let me look for
So
that.
click on that, and all the websites that we talked about are listed in there.
Awesome, will do. Thank you.
You're welcome.
Great. And Tom, I don't know if you can see the couple of questions that were asked already. Roy, can you see those now? Sure. All right. So Tom, can you see the two questions that were asked already?
No, I'm clicking on chat and I'm not. Oh, wait a second. No, I'm not.
Okay. So Tom, there was a question from Alex. Do you see them now?
Nope. Still, the last thing I'm seeing is the 206 note.
Okay. All right. So what if your worst 3 months span 2 quarters? Was a question from Alex Rosado.
Okay, Alex, you've got to pick quarters that are consistent either with the calendar, i.e. January, February, March, April, May, June, etc., or are consistent with your bookkeeping system and or fiscal year. You can pick your worst 3 months and call it a quarter. It can be situationally unique, so I would suggest give us a call, 845-356-6065. And that's the SBDC number. Everything we do is free and confidential, completely confidential. And we'll try to answer the question in your circumstance. So generally the preference is that you use established quarters, but there are ways you can use other than that. So give us a yell and we'll help you figure it out in your case.
Great. And Tom, there was one other question that came on about halfway through the presentation from Robert. Tom, I'll just read it verbatim as it said. If your business operated in 2019 and 2020, how can you demonstrate or can you demonstrate a 25% reduction in gross receipts on an annualized basis? And the question was 2019 versus 2020. Do you understand the question?
Not entirely. I'm assuming, so you're open in 2019, you're open in 2020. You have to compare your sales by quarter from 2019 to your sales by quarter in 2020. And at least one of those quarters in 2020 has to be at least 25% less than in 2019.
Okay.
Interestingly, the rule doesn't say, sorry, George, interestingly, the rule doesn't say that you have to have more than one quarter, that you have to be down for the year. You have to be down for one quarter. So if maybe you had a really dynamic quarter also in 2020, so year to year, it's not so ugly. As long as one quarter was 25% ugly, you're eligible.
Right, and that's okay. So that's that. I think that maybe that's the clarification. So you have to be down to reduce 25% gross receipts at least one quarter 2020 versus 2019.
And it has to be the like quarter. So if you're comparing Q2, it's got to be Q2, Q2, Q3, Q3, etc.
Got it. Okay. Great. So Tom, I don't know if there's any other questions that are popping up. We don't see any other questions that are popping up. If folks have hold on, there's one other. Brian Lovey has his hand raised. All right. So Brian has his hand raised. We're going to bring him live.
Okay.
Hi, Tom.
Okay, Brian, you're live.
Thank you for the presentation. And just to clarify one thing on that 25% revenue reduction for quarters, it applies to the first quarter of 2020 as well?
No, it applies to whichever quarter you choose to compare. So if you choose to compare the second quarter of 19, you've got to compare to the second quarter of 20, or the third quarter of 19 to the third quarter of 20, or fourth quarter 19 to fourth quarter 20. You have to compare like quarters between each year. You don't have to compare the year, just have to compare like quarters between 19 and 20.
All right, so just to clarify my question, does this apply to the first quarter of 2020 compared to the first quarter of 2019, or only for the second, third, and fourth quarter?
Oh, I'm sorry. I was just using them as examples. It could be any quarter in 19 to any quarter in 20.
Okay, thank you
So if
very
you want
much.
to do Q1, you can do Q1. It's just that we don't generally in doing these sort of presentations, I haven't referenced Q1 because the pandemic didn't really start until Q2 of 20. But yeah, you could use Q1 if your revenues were down in Q1. Yeah, do Q1 19 to Q1 20. That's fine. Yep.
Okay, are there any other questions from any of the folks? So I don't see that there are. We'll give it another minute or two if any folks have any additional questions, or instead of typing in, if you want to ask your question directly to Tom, just raise your hand. I just want to clarify for folks that this presentation, the videotape of this, the recording of this presentation will be downloaded and placed on the town's YouTube channel later on today. It will also put a link out on the town Facebook page, on my own Facebook page, and so that you'll be able to get it off of this presentation. You can actually download, as a participant, the actual presentation that has the links that Tom talked about. Tom is also willing to work with anybody, as well as here in the town. When we did this presentation with the Chambers of Commerce, initially, early on in the pandemic, we did not have an economic development staff person on board. We do now. Jeff Gillies, who's been really a great help to the businesses, and I'm delighted that we brought him on about mid-year last year. And Jeff has been out. He's probably talked with, I know, a number of folks on this phone call, on this webinar. Again, Mr. Gillies is available to help anybody and assist anybody. He can be reached at 639-2063, 639-2063 here within the town. And his email is j.gillies, that's j.gillies @clarkstown.org. Any last questions?
And George, if I may, it's Tom, just real quick. It's the supervisor has mentioned there's resources out there for you. If you're in business, reach out. These folks are here to help, and it's important. Additionally, support your local community, buy locally. The impact is significant across not just the community, but the town, the county, the state. It's the economic activity, from a bunch of takeout meals. Yeah, it's not the panacea. It's not the end of the problem, but it certainly helps. So if you're in respectable shape and you can afford to do some local spending, please do some local spending. If you need to reach us at SBDC, I'll do the quick shameless plug. 845-356-6065. We're over here at the college and we're meeting electronically with everybody. So everything we do is completely safe and all that sort of stuff, kind of like it is with the town. And again, Supervisor Hoehmann, thank you very much. We appreciate the opportunity to be of service to the town and to the citizenry. That's what we're here for. Thank you.
And Tom, there is, Yulitza did raise her hand again, so we're going to go back to her with one last question.
Sure.
If you could take that.
Yep.
Okay, you're live, Yulitza.
Okay, yes, thank you. I did have a question. Now, for the first round of PPP, I did see that there was like an extension on those dates. I actually own 3 different stores. They have different EIN numbers, 2 of which are in New Jersey. 1 is in New York, which is in Palisades. I was unaware that because I had the EIN numbers, which makes perfect sense because really they operate completely different. Would I still be able to apply for the first round of the PPP, or would I have to go directly into the second round?
That's an interesting question to which we don't necessarily have a really good answer. The theory at this point is that if your business has not applied, the theory was that you would go into the first round, but the first round closed. So no, you can't go into the first round. So
Okay.
it would be a second draw loan. Excuse me. Each EIN number for each business is eligible to apply. However, since you have common ownership, you'll be subject to the affiliate rules.
Right.
So that might, well, the affiliate rules It's a $2 million limitation. So assuming you don't need more than $2 million for your 3 businesses, we'll be okay.
Okay, perfect.
So
Thank you.
if you didn't get a first draw for some of those businesses, you should be able to get a second draw. You'll get a draw. Whether
Got
they
it.
call it first or second, we're not sure, but you will be eligible to get it. You don't have to have gotten a first draw to get a second draw.
Got it.
Can you elaborate about self-employed 1099er?
Okay.
1099er?
Great. Tom, there was a gentleman asked a question, but I think he's dropped from the call, but maybe you could ask the question so we have it as part of the webinar. He asked if you could elaborate as this works as it relates to self-employed individuals with 1099s.
Okay, self-employed individuals can apply directly as themselves, and they will get 2.5 times their average monthly income as reported via 1099 on their tax return. So for example, you're an independent contractor, you do video support stuff for the town and for SBDC and whatever. And you also do it for a couple of companies. So you've got a total amount of income that you can document. Take your total income for 2019, divide that by 12. That's your average. Multiply that times 2.5. However, it is subject to a $100,000 limitation. So in all cases, that's the maximum that you can get is $83.33 per month, basically, is the maximum that you can get under that. You cannot, interestingly, self-employment income is now also eligible for unemployment and pandemic unemployment insurance. However, doing both at the same time is considered double dipping and is illegal. So you kind of have to pick your poison. You can do PPP or unemployment. You can do both, but not at the same time. So you could use paycheck protection money for a period of time. When that's consumed, you can file for unemployment, or vice versa. If you already filed for unemployment and that has since run out, you could apply for PPP. Just don't do them at the same time. That would constitute fraud. And you know, I don't wish to threaten people. Just keep in mind the government has a really long memory. And if you ever think you're getting a tax refund or something in the future, and the government thinks you owe the money, you ain't getting it. So just be careful with it. Just be straight with it, and you'll do fine with it.
Great. So Tom, let me just finish up with this so we can get done within the hour, which is great. We're just about finished, folks, but a couple of closing remarks, and then I'm going to ask Tom to give us contact information one more time. But again, just here in Clarkstown, we take support of our local businesses seriously, from things like working with our local Chamber of Commerce's, which have really been great throughout the pandemic. They've been working with their members, trying to advocate and support, to offering webinars such as this. To our economic development staff, we're the only town with an economic development staff person in place out of the 5 towns in Rockland. Jeff Gillies, our economic development committee had actually recommended it. It was something that the town board and I funded and put into place this past year, and Jeff has been essential. So please, seriously, take us up on the ability. If you have questions, you can go directly to Tom Morley from the Small Business Administration up at RCC, but don't hesitate to reach out to Jeff Gillies. He's doing things like helping to expedite applications at the building department, helping to expedite applications at the planning board, working directly with our local businesses, our chambers, our restaurants and bars, and really doing everything we can. We've also passed several local resolutions that have allowed things like use of sidewalks and parking areas for outdoor dining, for outdoor retail sales. We're going to continue those in 2021, and we'll be renewing those resolutions, extending them, directing the building inspector to relax his interpretation of the rules and to relax enforcement, to allow things that have never been allowed before in the town, again, as a way to help our retail sector. And then finally, Meet Me on Main and some of those other events. We're going to continue those as the weather warms up. We'll be closing certain streets and allowing for outdoor dining and things of that nature. So if you have questions, please reach out. You can get my office at 639-2050, 639-2050. You can reach Mr. Gillies in his office at 639-2063, 639-2063. And also, as I said, by email at j.gillies@clarkstown.org, j.gillies@clarkstown.org. I do want to thank Tom Morley for his willingness, not just on this webinar, but he's been a resource to us throughout the pandemic, and I'm grateful. I want to thank my staff that assisted in putting this together, Mr. Gillies, Jeff Gillies, Erica Machete, Al Maroney. Also want to thank Roy from our IT department, who was on the back end, making sure that this was a seamless presentation. And Tom, just again, thank you. And one more time, if you could give your contact information, that would be great.
Sure. And again, Supervisor Hoehmann, thank you very much. We appreciate the support that Clarkstown shows and the commitment that Clarkstown has evidenced for their business community. It really does go a long way. The Small Business Development Center over here at Rockland Community College, you can reach us at 845-356-6065. Once again, 845-356-6065. I thank you for your attention today, and we're here to help. Give a yell. Thank you.
Great. So that's going to conclude it, folks. This presentation and the webinar will actually download later on today, but by this evening, to the Clarkstown YouTube channel. It will also be put out on our Town of Clarkstown Facebook page with a link to the YouTube, so you'll be able to go back and view it from there. In addition, it'll be on my Facebook page, Supervisor George Hoehmann's Facebook page as well, so that you can actually go on and see it, and you'll be able to actually, anybody that's participated in the webinar will actually be able to download the presentation, including with the links. Again, folks, we're here to help. Good luck. I know that there's been a real slowness in the way in which the vaccine is rolled out. My office is working closely with the state and the county government. We're looking for more vaccines to be coming through. It's really been problematic, but it's not for lack of planning on the part of the town and the county. It's frankly just been a bottleneck with the vaccines coming through. But hopefully, as the vaccines really start to deploy over the next several months, things will start to improve, and we'll start to see life as we know it getting back to some sense of normalcy, or whatever the new normal is. But in the interim, hopefully this has been a good webinar for you to get a lot of links, to get a lot of information, to know where you can go. And remember, as Tom said, the banks, the program was refunded and started today with many of the local banks, and some will be starting tomorrow. So my advice is get in it and get in quickly. There were very many people that got in late last time and they were delayed. And as I said, if you need any assistance, contact my office, contact Mr. Gillies, and please contact Tom Morley. So that's going to end it. Thanks again, Tom. Thanks to all those that put this together. And as I said, please contact us at 639-2050 or contact Tom directly at his number as well. Thank you all, and have a wonderful day.